If you are watching this video right now, it really shows that you're interested to learn how you can actually make money in the global financial market. This video is proudly sponsored by Amex Trading. So if you have not yet subscribed, why not smash that subscribe button, turn on the notification bell so that you get to see this video each time we upload them. Note, this is a full introduction to the global financial market episode. So stay to the end, take your pen and paper so that you get all the notes that you can get from this video. Now here's the big question. What is Forex? What is Forex? Simply put, Forex means floating rate of exchange, and this has to do with slight difference of fluctuation in prices of currency. We all know that when you take your naira note or you want to travel to the US, you convert your naira to dollar, you see the slight difference of price. And even when you are coming back, you convert your dollar to naira, you also see the slight difference in price. So when you change one currency to the other, or when you buy one currency to the other, there's always a slight difference. And when you are doing this, you're actually trading Forex, because you cannot use one currency to buy that same currency. You cannot use your naira note to buy naira note, and you cannot use your USD to buy USD. It has to be another currency. So when you are doing this, you are actually trading Forex. Now, which other financial instruments that you can actually trade in the global financial market? The first one you can actually trade, the most popular one, is the currency. You see, most traders who trade in the global financial market, many of them trade currency pairs, and this has to do with all popular pairs you can think of. We are talking about the USD, CHF, GBP, JPY, EUR, CHF, just to mention a few. Then if you are not trading currency, you are trading oil. If you are not trading oil, you are trading metals. If you are not trading metals, you are trading stock and cryptocurrency. These are the financial instruments that you can trade. All of them are profitable. All of them will make you money. So you don't need to wonder, okay, which one should I focus on so that I will make money? All of them can make you super cool money. Now, the average daily volume that passes through the Forex market every day is really mind-blowing. I know my slide is showing 5.0 trillion, but as today I'm making this video right now, it's close to $7.7 trillion. That is way bigger than the New York stock, the Tokyo stock, and the London stock. So there's always money in the market. It doesn't matter whether you are just starting now or whether you've been trading for years. There's always money in the market for everybody to share. So you need to watch this video to the end so that you get the most out of it, how you can secure your place, how you can position your place, position yourself in a way that you can be making profit in the market. Now here's the big question. How is Forex traded? Forex is traded by pairs. Just as I mentioned before, when you want to travel from Nigeria to the US, you have to change your naira note to the United States dollar, because you cannot spend your naira over there. So by the time you are doing all this, you're actually using one currency to get another currency. You are pairing the two currencies. So similarly, in the Forex market, you pair currencies to trade. Some of these currency that you can pair with is Euro USD, USD JPY, GBP USD, GBP CHF, AUD NZD. All of these are the currency pair that you can pair with. These are just few compared to the many we have there. So I want to give you homework. Find out all the Forex majors, the Forex minor, the exotic. Find all the currency pairs that are underneath it, even the cryptocurrency. Then write it out, try to memorize them, try to understand which of these pair are pairing each other. So when you do that, you get to familiarize yourself with all of these pairs. Now, when we are talking about pairs, you also need to focus on the Forex time zone. The Forex time zone is really important when you are trading. The Forex market had four major sessions, which is the London, the New York, the Sydney, and the Tokyo. So when you understand this, it will really help you in your trading journey. Other than the Forex time zone, we also have the market hierarchy. The market hierarchy, which are the major banks. The major banks, they are there to help control the market. They are there for regulations. They are there to avoid manipulations in the market. Then we have the major bank, like we mentioned. We have the electronic brokerage service, like our broker Light Finance, that we'll be introducing you to. Because when you want to start your forex journey, you need a good broker that will really help you to make good money in the market. So we have our electronic brokerage service, which is the broker. Then we have our medium-sized bank, like your normal banks that you have. We have our hedge funds, commercial company. Then we have you, which is the retail traders. It's really important to know all the hierarchy in the market. So these are just the hierarchy. This is how the forex market works, the global financial market. This is how it works. They are all connected. Now, when it comes to market analysis, you get to understand that you need to analyze every market. Yeah. And to analyze this market, you need what we call technical analysis, fundamental analysis, and also sentimental analysis. In the course of this class, you get to understand what is technical analysis, what is fundamental analysis, and sentimental analysis. Like we all know, we use technical analysis has to do with what has happened in the past, what is happening now, to determine whether you will buy or you will sell, what will happen in the future. Since nobody can really tell what will happen in the future, we only use what has happened before, what is happening now, to know what will happen in the future. In doing this, some trader has so many indicators on their chart, giving them the direction that they feel the market will go. Then what about fundamental analysis? This has to do with economic, financial, any other news that really affect the currency. So it's really good for you to watch the episode upon episode that we'll be dropping here in this video, so that you get to understand how you can use your technical analysis, your fundamental and sentimental analysis when you are placing your trade. It's very important. Now, apart from market analysis, you get to see your trading styles. Each of the traders have their own trading styles. So you either become a short-term trader, a middle-term trader, or a long-term trader. No matter the trading style you want to be, it's very, very profitable, and you can actually trade with them. Now I want to talk about some basic definition in the market. Some basic definition, like I said before, currencies have been traded in pair, or the forex market have been traded in pairs, like your euro USD, for example, as we are seeing on this chart. Each time you see currency like this, the first currency pair is always called the base, while the second is called the counter or the quote. So take note, the first the base, the second the counter. Now we have another definition of basic terms, which is pips. Pips is another short form for percentage in points. We use pips to measure our loss. We also use pips to measure your profit. So for example, you place a trade and you make profit, you measure it by pips. Or you lost, you also measure it by profit, by pips when you lose. So at the end of this course completely, you get to see how you can actually use your pips to how these pips will help you when it comes to money and risk management. How you know the amount of pips you'll be making each time you want to place your trade. Now, as you are placing your trade, the amount needed and the lot size you will use and the amount per pips you'll be making are all stated here. For example, you have your $10, your $50 to $5,000 amount you need to trade. These are the amounts you need to trade. and the volume you can take from this amount that you have as your capital are all in here. For example, I have $10. I can place a trade with the lot size of 0.01, and for example, I also have $900 in my account. I can also place a trade with 0.9. So and I'll be making 9 dollar per pips. And if I'm using $10 for my trade, when I'm using 0.1, I'll be making 10 cents per pips. So this is how pips work. Because of the amount I have and because of the lot size I'm using, that same trade I'll be making $1. Somebody else will also enter that same trade. I'll be making, let's say, $10. So the reason is because of the amount that we have and also the lot size we are using to place our trade. So we also have what we call the bid and the ask. The bid is at which the market is prepared to buy, and while the ask is at which the market is prepared to sell. It's very important for us to know this. The price at which the market is selling or buying is what we call the bid and the ask. So you buy a currency pair and you want to buy, you want to sell, and I ask you, this particular pair that you are using to trade, how much did you buy it? So you need to understand the bid, you need to understand the ask. The broker are the ones selling this for you. They are giving it out for you. You are actually buying. So the price at which the broker has set is what we call bid when you are buying, and the price at which the broker has set is what, when you are selling, is what we call the ask. I hope you get that clear. Now the difference between the bid and the ask is what we call spread. This is how the brokers are making their money. You definitely want to be making profit for every business that you want to do. So this is how the broker are making their money. And when you are using light finance, there are some currency pair that have as low as 1 spread, even 0 spread when you are placing your trade. And they also have floating spread. I'll be introducing you guys to light finance, how you can actually navigate through it and be using it to trade. Now when you see a market like this, it's clear most of us know what this is. If you know what this is, please leave it in the comment section. This is a bullish market or an upward movement of price. We can say the market is ascending. We call this bullish market. Bullish market. Then when we see this other side, when the market is falling or descending, we call it bearish market. Bearish market, the downward movement of price. It's really important for us to take note of this. And in course of placing this trade, making our money, and also minimizing our loss, we have what we call take profit and stop loss. Take profit allow the broker rather to close your trade when you set your take profit at a specific price. Same with stop loss. They stop your trade when you are losing at a specific price. They close your trade. It's very important to always set your take profit and your stop loss. So we are going to show you how you can actually do that when you are trading. Now what do you need to start this forex journey? Knowledge, which is what you are doing now, and your little time. So as long as you are watching this video right now, it shows that you have a laptop, your phone, or internet. So these are the things you need to start. You don't need any extra other technology, other things that you need: your phone, your laptop, and internet. And most importantly, you need capital to trade. Now what are the advantages of forex? As we all know, the market is 24 hours. The market never sleeps. It's always working. And education is not a barrier. So you don't need to be a professor or study banking and finance before you can trade in the market. No. And this can actually provide additional source of income. You don't need to quit your job. And it's flexible. You can trade it anywhere. And you can trade it with your computer or your mobile phone. And most importantly, you can make passive and residual income. This is very, very wonderful. This is very, very wonderful. And thank you so much, guys, for watching this video to the end. Thank you for making that time to walk through with me how you can understand the basics of the forex market. Now in our next video, I'm going to be showing you how you can actually start trading in the global financial market. I know you don't want to miss that, so I will see you in my next video.